1 year ago today, April 2, 2025, President Trump announced what he called Liberation Day, sweeping tariffs on imports from nearly every country in the world. The largest import tax hike in modern American history overnight, the S&P 500 dropped 4.8%. That day, the next day it dropped another 6% after China retaliated. In 4 days, the U.S. stock market lost $5.83 trillion in market value, the steepest 4-day loss since the 1950s. Recession odds doubled to 40%. 80% of CEOs expected a recession. The bond market got so scared that Trump himself paused the tariffs. Today, exactly 12 months later, I want to look at what actually happened. Not what people feared, but what actually happened, and connected to where we are now. The same fears are back, patterns repeating, and opportunities and mistakes are available. Stay with me. Move number 7 separates those who build generational wealth from those who just get by. Let me start with the facts, not the fears. The facts. 1 year after Liberation Day, here is what actually happened to the U.S. economy. The tariffs did not cause a recession. Despite recession odds hitting 40%, the economy did not contract. GDP growth continued in the 2.2 to 2.8% range. Corporate earnings grew for the 9th consecutive quarter. The S&P 500 not only recovered from its Liberation Day crash, it hit new all-time highs before pulling back again, but the tariffs did cause real damage in specific areas. 9 in 10 goods firms raised prices within 6 months of Liberation Day, but 75% of those firms still reported margin declines, absorbing significant costs themselves. When they could no longer absorb it, the prices went up at the store. For the average American household, analysts now estimate the total cost of tariffs at $1,800 per year. $150 per month, quietly extracted through higher prices on imported goods with no bill-in. The mail. Firms with global supply chains suffered significantly more than domestic-focused firms. The gap between companies with international exposure and domestic exposure widened dramatically throughout 2025. This is the hidden story of Liberation Day. It did not hurt everyone equally. It hit hardest on middle and lower income households who spend a higher percentage of their income on imported goods. And the legal battles. The Supreme Court ruled in February 2026 that Trump's use of emergency powers was unconstitutional. The government estimates it collected $166 billion in tariffs it now owes back. The refund process is underway but slow, so 1 year later, the economy survived, but $1,800 per household disappeared. And the uncertainty created by the back and forth continues to suppress business investment and consumer confidence. Now let me talk about what actually happened to investors. This is the most important part of the Liberation Day story. The investors who panicked on April 2nd and sold their portfolios locked in losses of 15 to 25%. They crystallized those losses permanently. When the market recovered, they were sitting in cash watching the rebound happen without them. The investors who did nothing, who just sat there and did not touch their portfolios, not only recovered all their losses, but saw their portfolios hit new all-time highs within months. A global 60/40ths portfolio climbed over 20%. Patience pays off. Zero skill, zero research, zero effort, just patience. This is not a coincidence. This is a pattern that has repeated in every major market shock in history. The 2008 financial crisis, the 2020 COVID crash, the 2022 rate hike sell-off. Every time, the patient investor won. But here is the thing that makes Liberation Day uniquely instructive. The fear at the time felt completely justified. The evidence for a recession was real. The damage to supply chains was real. The market decline was catastrophic. And yet, staying invested was still the correct move. If the correct move was to stay invested when everything looked catastrophic a year ago, what does that tell you about right now? When markets are down again and recession odds are high again, here is where this gets directly relevant to your money. 1 year after Liberation Day, the environment in 2026 rhymes almost perfectly with April 2025. The stock market is down. The S&P 500 is down 7% year to date. The Nasdaq has fallen over 10%. Recession odds are high. Moody's AI recession model sits at 49%. the highest level in years. Just 1 point below the threshold that has called every recession in 80 years of data. Oil is at $100 a barrel following the situation in the Middle East, adding inflationary pressure. Consumer confidence is at historic lows. 1 in 3 Americans expects their finances to get worse in 2026. 42% believe economic collapse is coming. If you felt scared a year ago during Liberation Day, you probably feel scared again right now. And that fear is understandable. The data supports it. But here is what 12 months of Liberation Day aftermath teaches us. The fear was real then too. And the economy survived. The market recovered. The people who stayed calm and stayed invested won. The pattern is consistent. The lesson is clear. The question is whether you are going to apply it this time. Before I give you the 7 moves, I want to share 4 things that surprised economists, analysts, and investors about what happened after Liberation Day. Understanding what surprised the experts is one of the valuable things you can know going into the next 12 months. Surprise 1. The market recovered faster than anyone expected. Most analysts predicted a prolonged bear market. What actually happened was a sharp crash followed by a sharp recovery. The speed of the rebound surprised almost everyone. Staying invested during the crash was even more critical than it appeared. The window for buying at the bottom was very short. Surprise 2. Inflation was not as severe as feared. Tariffs were expected to trigger a significant inflationary surge. While prices did rise, the increase was more moderate than models predicted. Companies absorbed more of the cost. This is partially why the recession that was predicted did not materialize. Surprise 3. Corporate earnings remained strong, despite tariff headwinds. S&P 500 net margins remained solid. Companies adapted, found new suppliers, renegotiated contracts, passed some costs, and absorbed the rest. The resilience of corporate America surprised almost everyone who predicted catastrophe. Surprise 4. The Supreme Court ruled the tariffs unconstitutional. This was not in any forecast. The government now owes $166 billion in refunds. This legal twist added an unpredictable dimension. Nobody saw this coming, and it continues to create uncertainty about what happens next. Here are the 7 moves. Each one is grounded in what the last 12 months actually taught us, not what analysts predicted. Move 1. Stay invested no matter how scary the news is. This is lesson number 1 from Liberation Day. The investors who stayed invested through the Liberation Day crash outperformed those who sold. The S pattern has repeated. If you are tempted to sell right now because the market is down, remember April 2025, remember what happened. Stay invested. Move 2. Keep contributing on a regular schedule regardless of market conditions. Dollar cost averaging, investing a fixed amount on a fixed schedule, is one of the most powerful wealth-building strategies. During Liberation Day, the market dropped dramatically. Those who kept making monthly contributions bought significantly more shares. When the recovery came, those additional shares appreciated substantially. The regular contributor always wins. Move 3. Build and protect your 6-month emergency fund. One of the biggest mistakes is being forced to sell investments. If you have 6 months of expenses in a high-yield savings account, you can leave your investments untouched. This financial buffer gives you the ability to stay invested when everything feels like it is falling apart. Move 4. Take the tariff refund opportunity seriously. The Supreme Court ruled the Liberation Day tariffs unconstitutional. The government is processing refunds. If your business paid tariffs, research your eligibility. This is $166 billion being returned to businesses. If any of it belongs to you, this is free money. Move 5. Diversify into defensive sectors. Not all sectors are equal in a trade war environment. Companies with international supply chain exposure suffered more than domestically focused companies. Utilities, consumer staples, and healthcare are more resilient during uncertainty. Consider shifting your allocation. Move 6. Open or maximize a Roth IRA. This is specifically relevant to the current environment. If tariff refunds create a short-term reduction in revenue, the government will need to find revenue elsewhere. That almost always means looking at taxes. A Roth IRA allows you to contribute after-tax money now and withdraw it completely tax-free in retirement, including all growth. Locking in tax-free growth now is powerful. Move 7. Build one income stream outside your salary. This is the move that changes everything in the long run. Liberation Day reminded everyone that economic policy can change overnight. A job that feels secure can disappear. The only true financial security is income that does not depend on any single employer or policy. Decision, freelancing, content creation, consulting, investing. Small business, any income stream reduces your exposure. Start one this month. Even if it makes almost nothing at first, it needs to exist before it can grow. 1 year ago today, millions of Americans were terrified about what Liberation Day would do to their money. The fear was real. The market crash was real. The economic disruption was real. And 1 year later, the economy survived, the market recovered, and the investors who stayed calm, stayed invested, and kept contributing came out ahead. We are in a similar moment right now. The fears are real, the risks are real, but the pattern of history is equally real. And that pattern says, the patient investor wins, every time, without exception. You are watching this video on April 2nd, 2026, exactly 1 year after Liberation Day. That is not a coincidence. That is an opportunity. An opportunity to apply the lesson that 12 months of market data has given us, and position yourself for the next 12 months with clarity instead of fear. Take one move from this list tonight. Just one. And subscribe to The Silent Shift for daily finance moves that keep you on the right side of history. The shift is quiet, but it started 1 year ago today, and it is still happening right now.